Hi, everyone, and welcome. We are so excited you're here for this conversation about taxes and NIL. If you're a college athlete navigating name, image, and likeness, you're a part of something big. You're signing deals and earning income all while balancing the demands of academics, training, and managing your financial future. That's exactly what brings us together today, managing your financial future. Whether you're already signing deals or just starting your journey, this session is for you. We're going to cover foundational concepts every earner needs to know and the specific considerations for NIL. We're going to answer some questions, including: do I need to set money aside during the year? And am I an employee or business owner? How do expenses impact my taxes? And most importantly, how do I avoid surprises and make a plan? For me, for you, and our awesome guest alongside me, we need a plan for taxes. Even if you're not making NIL money yet, this session is absolutely for you. Understanding the basics of income and taxes puts you ahead of the game, and that's why we're here. My name is David Cook with Intuit for Education. At Intuit for Education, our mission is to help students build financial confidence for life. We provide free personal and professional financial education because confidence in managing your finances starts now, not in the future or after graduation. Whether it's budgeting, credit, taxes, or building a business, Intuit for Education is here for you. I'm thrilled to be joined today by our subject matter expert, Patrick Miller. Patrick brings decades of tax experience, but he also brings a unique perspective. Long before NIL existed, Patrick played Division One basketball himself. Patrick, welcome. I'll turn it over to you for an introduction, and then we'll dive into the fundamentals.
Thank you very much. Again, my name is Patrick. Let's get started. I'm a longtime CPA from Denver, Colorado. I went to Eastern Michigan University for my undergraduate degree in accounting and Colorado State University for my master's in accounting with a specialization in taxation. Been in Denver for a long time. As David said, I was a Division One college basketball player at Eastern Michigan University. I like to tell people I was a really, really good small high school player in Michigan and a less than average Division One basketball player, but it paid for my education and kind of was a pathway for me to Colorado. I've been a subject matter expert with TurboTax for 10 years and have a special interest in NIL. And let's move on.
Awesome. Thanks, Patrick. To kick things off, if someone in the audience is thinking, I'm 19, I'm a student, maybe I'm still dependent on my parents, do I need to worry about taxes? What would you tell them?
Great question, and the answer is yes, that's a fact. Filing and reporting requirements are based on what you actually earn, not your age, not your enrollment status, and whether someone else claims you as a dependent. And we'll get into a lot of these details later.
Great. Let's zoom out for a second. What are taxes, and specifically, why does everyone need to learn more about filing taxes?
Well, first off, it's required by law, so we want to stay on the right side of that. Uh, Taxes are kind of one of those necessary things that helps fund the government, social programs, and everyone pays taxes. Hard to get away from it. One thing to keep in mind is how you pay those taxes, whether it's through withholding or what I call pay as you go.
Okay. Question I've heard: no matter how much money I earn, whether it's from a job at a cafe or NIL income, it's all the same for the purpose of filing taxes. Is that a myth or a fact?
That's another myth. So the type of income or source of income that you receive may change how you file and the type of forms you receive from companies and the IRS. Major difference between being an employee, of which you'll get a Form W-2, and a business owner or independent contractor where you're self-employed.
So, am I hearing there's two types of income?
Absolutely. W-2 income is a traditional income or employment like a job on campus or at a restaurant or a summer job for a landscaper or an internship with a company. In that case, your employer handles the tax withholding for you, and it's going to get deducted out of your paycheck. When you're an independent contractor, it's like you own your own business. In that cases, no taxes are withheld, and you are responsible for calculating and paying your own taxes.
Okay, W 2 versus 1099. Got it. What about this? Myth or fact, the amount of money someone earns in a year matters when planning for filing taxes.
That is true. That is a fact. There's different thresholds, but if you have a just employment job where you're getting a weekly or monthly paycheck and having withholding, you're only required to actually file taxes if your income is over the standard deduction. And that in 2026, it's around $16,000, less than 2025. The reason you'd want to file, though, is if your employer withheld taxes. So you'd want to file in order to get those taxes back. Sometimes employers will do that, and you realize at the end of the year, I don't even have to file, but of course you're going to want to get that withholding back. Same type of limits apply if you're self-employed or an independent contractor owning your own business effectively, but you are required to file if you have over $400 of net self-employment income, and that's your independent contractor income less appropriate expenses. And then you have to pay self-employment tax separate apart from income tax. We'll talk about that a little later in detail.
Okay, great. That covers the income side and the amount of earnings. What about taxes? Myth or fact? There's two types of income taxes, federal and state.
That's also another myth. The two common ones that we know about are federal and state income taxes, although there are seven, maybe eight states that don't have a state income tax. The third one is what we call FICA and Medicare, or more commonly known as Social Security. And how that is paid depends on whether you're an employee or an independent contractor.
Can you explain a little bit more about that Social Security, the FICA part?
Exactly. So if you're an employee, when you get that weekly or biweekly paycheck, you're going to see on it that, I'll give you an example. If your base pay, let's say 40 hours, $25 an hour is $1,000, the employer is going to withhold about a little over 7%, let's say $75 from your pay. And they're going to pay that to the Social Security Administration. On top of that, the employer is going to match that. And they're going to send that also on your behalf to the Social Security Administration. If you're an independent contractor, there is no withholding. And come tax time, you get to pay both sides of it, both the employer portion and the employee portion. So you can plan on that same $1,000 having to pay $150 to the IRS, who remits it to the Social Security Administration, versus $75 when you're an employee.
Okay, let's talk about NIL athletes with a tricky question. We talked about income. What if an NIL athlete receives a non cash item, merchandise, a car? Is that just a gift with no tax implications?
Another incorrect assumption and a myth. So IRS rules are that you have to declare all of your income, no matter how received. So if you get what we call non-cash compensation, merchandise, gift cards, the value of a car, and that would be depend on whether or not you actually have ownership of the car or whether you have the use of the car for a year, cryptocurrency, anything like that that's not monetary, in a paycheck or funds is also taxable based on what the fair market value is.
So, what's the best advice for someone who earns NIL income, cash or non cash?
Don't wait till the end of the year to figure it out. The best thing you can do is right now start keeping track. Planning from the very beginning of the year is really critical. Know how much you're making, Uh, there are some expenses you might be able to claim if you're an independent contractor, which NIL, most forms of compensation is going to be independent contractor. And you're going to want to keep a log for mileage, for expenses, track receipts, take pictures of them. Most of it can be done electronically. The old days we used to put all that stuff in a shoebox. Now, you know, there are apps out there that will help you keep track of all of these things.
Pat, based on what you're describing, it sounds like NIL athletes are treated like their own business, small business owners.
It's exactly what you are. It's like you've got a little business called Patrick Miller or your name, and it earns income. It has expenses, and it accounts for its own taxes. So that's why it's critical to start early, planning on what those taxes are going to look like, keeping track of those expenses that you can reduce the amount that you pay tax on, and be ready for year end when you're now required to file a tax return.
Okay, that's good to know. I want to come back to expenses a little more in a moment. An NIL athlete earns income, there's no taxes withheld, and they receive a 1099, you said. When and from whom do they receive a 1099?
That's correct. Many of you who may have already had summer jobs or high school jobs are familiar with a Form W-2. That Form W-2 is coming from your employer in an employer-employee relationship. When you have your own business and are considered an independent contractor, the company that provides those payments are going to issue you at the end of the year what's called a 1099-NEC for non-employee compensation. That's going to come between January 1st and January 31st of the year following. And that's what's going to be used to start your tax return. Keep in mind, those forms also get reported to the IRS electronically. So you might think that, well, I can ignore this. Eventually, the IRS computer is going to send you a notice, hey, you haven't filed taxes yet. We don't want to get to that point. We want to comply, keep your compliance current on time, file and pay by the deadlines.
Okay, so at some point we're going to need to file, but this idea of when I receive income, what's the first thing an NIL athlete should do? Should they save some of it, and how much should they save?
Absolutely. When you get that gross payment, and let's go back to our example of $1,000. If you're an employee, the employer's already taken taxes out, which is just an estimate. You still may owe at the end of the year. If you're an independent contractor and there's no taxes withheld, you need to start planning and putting money aside so you don't get a big surprise at the end of the year. And rule of thumb is 15% for that self-employment or Social Security, more formally called self-employment tax. Depending on how much you're earning, at a minimum, probably 10% for federal income taxes, and I would say 4 to 5% for state income taxes. So at a minimum, I would start at 25%. Okay. Now, if you're under that $16,000 threshold, you may not end up having to pay any tax other than the self-employment tax. Uh, but why not be safe? If you end up at the end of the year finding out that, well, wait a minute, I put aside 25%, but I don't need all that for taxes. Great. Then you've got a cushion. Much worse than the situation where you put nothing aside and all of a sudden you've got I made $5,000 and I've got a 25% tax liability, $1,200, $1,300 or more that I didn't save for. So set it aside up front and you'll be in good shape at the end of the year.
That's great advice, Pat. This idea of planning and setting money aside. What what is the role for these NIL business owner independent contractors of expenses so they can plan in the same way you just described?
As a business owner or independent contractor, you're allowed to take expenses against your income and reduce your taxes. Those are the terminology for that is, are they reasonable and are they ordinary and necessary? So expenses that help you earn that money can be deducted. Take, for example, your cell phone. Your cell phone, probably 70, 80% of it is personal usage, and you might use 10 or 20% of your time for calls regarding the NIL or surfing the web or whatever. So you might be able to deduct 10 to 20% of the cost of your cell phone service. Same thing with perhaps computer mileage. If you're driving to events or using your automobile for earning that income, then the easiest way is to just take what we call the standard mileage deduction, which I think is like 65 cents a mile. Might be a little more now in 2026, but 10 miles, you get a $6.50 deduction and you save 25% in taxes. If you drive 1,000 miles, that adds up pretty quickly. So the big thing is you have to keep track. So you need to uh, keep track of the expenses. When was it incurred? Why was it incurred? How much? Where? And have a receipt. And the reason for that is somewhere down the road, if the IRS ever wants to look at them, you've got all this information and you don't have to look back 1, 2, or 3 years and say, oh my gosh, I've got to find all this data. So keep track of it as you go. If it's mileage, there's a bunch of apps out there that keep track of business mileage and set up a spreadsheet, whatever you have to do electronically. As I said before, the old days, we had a shoebox. And I remember getting those shoe boxes when it came tax time. Prepare early, be organized, and you'll be in good shape when it comes time.
On that topic of prepare early, what about retirement? Someone asked about retirement, putting some of my NIL earnings into a retirement account. Are NIL athletes too young to do that? Is there some value or benefit from saving for retirement?
Actually, this is the best time to get started. There's some really tax advantage ways to put money aside through individual retirement accounts. And we've got a bunch of resources on the TurboTax community site about that. But you could easily, if you're getting $10,000 a year in NIL money, if you can put $2,000 or $3,000 a year or more away into an IRA account, there's some really tax advantage situations that can grow tax free for 40, 50 years. And when you take it out as tax free, it's called a Roth IRA. But anyways, if you start now, that compounding just just absolutely is magical. So take a look at that. If you can, if you're able to, set some money aside and set up an IRA account. And you can do that anytime during the year or up until after April or up until April 15th the year after. So big, big advantage.
Awesome. That's great to know. I want to talk in a moment about how to use TurboTax to file taxes. But before that, two more quick questions. You mentioned state earlier. Can you explain state one more time? If I live in, say, the state of Texas, I only pay state taxes to Texas, or the same for New York or Illinois or anywhere?
That's correct. Most athletes, while they're going to college, their resident state, their home state is going to still be the state where your parents live and where you grew up and where you call home. If you go to California, though, and you get NIL money or you're working in a job in California, you're going to have a California filing obligation and may owe California taxes. Again, it's going to depend on the level of income that you have. Something to keep in mind. If you live in Ohio and go to California, you're going to have, Ohio does have a state income tax. You're going to pay California taxes on your California income, and you'll get a credit for those in Ohio. So states don't make you pay tax twice on the same income. There's a credit that works between the states, so you only pay tax in the state you're working in. Something to keep in mind.
That's great to know. And the last little question I have, what is the IRS's pay as you go system? Why should NIL athletes know about that?
So IRS wants you to pay taxes as you go. And the reason for that is if they didn't require that, the end of the year, you would have spent all that money and the federal government's not going to get their take. So if you're an employee, it's done through withholding every single paycheck. If you're an independent contractor, of which NI athletes are going to be for the most part, they require you to make estimated payments. Now, you don't have to do it your first year, but starting your second year, you do. And that's going to be based on a couple different things. But once you get into this for more than a year, you're going to have to make quarterly estimated payments. Those dates are April 15th, June 15th, September 15th, and January 15th of the following year. Special form, or you can do it online at the IRS website. You can do it on your state websites. One thing I'd encourage everyone to do is you can go online right now to irs.gov and set up an IRS online account. There's a wealth of information there about your personal tax situation. And once you've got it for life. I advise all my clients to do it. You can correspond with the IRS. You can get transcripts. You can see what companies are reporting about you. Tons of information. If you have time, it takes about 10 minutes. They use an ID verification system called ID Me. And it's easiest to do on a cell phone because they're going to want a picture of your driver's license and a selfie to verify who you are. So go to irs.gov, look at create an account, and you'll have it for the rest of your life. So
Pat, thanks so much. The level of detail on that is so helpful for those who are listening today. Can you walk us now through the steps that we need to file taxes? The end of the year comes, speaking for NIL athletes and anyone who needs to file taxes. Can you walk us through the steps?
sure. I always encourage people to wait till after January 31st. You're going to get forms sent to you in the mail. And depending on what address you're using, many people might use their parent's address. It may go to their parent. You might get an email notification and you can sign in to a portal, a payroll portal, and get that. Typically not done with 1099s. They usually will mail those out to you. So mid-January to the end of January is when you should be looking for those forms. Once you've done that and you've accumulated what your expenses are, then you can start your taxes. You can use our TurboTax software, which is an interview-based process. I recommend to people that you can set up an online account with TurboTax early in the year, but wait until probably the end of January before you start really doing your tax return, and probably mid-February before you even file. The IRS typically doesn't even allow you to e-file until late January because they're still finalizing their forms and such. So, end of January, early February is a perfect time to start it. But by the end of December, early January, you can start gathering all your documents.
Okay, so we're in TurboTax. We've gathered our documents. What's the first step after that in TurboTax?
So in TurboTax, there's really kind of four sections. The first section is your personal information. That's where you're going to enter your name, your address, your social security number, where did you live, what your age is. It's going to ask you about whether or not you can be claimed as a dependent on your parents' tax return. It'll ask some other questions. Are you a student? Uh, and then um, based on those questions, it's going to populate more questions and fine tune the interview for your situation.
Okay, so an interview, step one, we got personal information. What's next? Income?
Second step is income. It's going to go to an income section. It's going to ask, do you have a W-2? Do you have a self-employed business? That's the section you're going to want. And once you get into the self-employed section, it'll ask about what's your income. Did you get a 1099? And then it's going to ask you about expenses. And it'll prompt you based on the type of income that you have, what type of expenses you might have, cell phone usage, auto usage. It'll have a list for you, and some of those might prompt you to, oh yeah, I did have some of these types of expenses. I got to go back and find them. So once you've done that, and there's also a section for investment income. If you've got money set aside in a savings account or a brokerage account, we're going to have to enter that information. And that'll come directly from the bank or the financial institution. Those 1099 interest and 1099 dividend forms. They also come in January. So once you get your income set up, you're probably about 60% of the way there.
Oh, wow. Okay, so we're over halfway done, past halftime. Well, third quarter, I think it's expenses and deductions next. Is that a manual calculation? Is that
That's
difficult?
correct. So the expenses and deductions, there's really kind of two types. One is expenses that are considered itemized deductions. And for most athletes in college, they're probably going to end up taking the standard deduction. You get to deduct either the standard deduction, which is around $13,000, $14,000, or itemized if they're higher. Itemized deductions really relate to home ownership, mortgage interest, real estate taxes, state income taxes, and maybe charitable contributions. So without owning a home, it's pretty hard to get over that standard deduction. And the interview will ask you a few questions. Did you have these types of expenses and how much were they? And we're going to choose to take the standard deduction. But that section's also where you're going to enter information about education and whether or not you can take advantage of any education credits. If you have children, do you have child tax credits? Those types of things. So again, go through the interview. It's gonna prompt you for a number of different types of expenses that you can enter.
Can you remind us, please, one more time why entering these expenses, taking these deductions to lower taxable income, why is that important?
That's right. And so on your self-employed business, those expenses directly related to the business are going to reduce not only your income taxes, but that self-employment tax. That's hard to get rid of. Okay. Other types of expenses, or credits, child tax credits, student loan interest, those types of things also have the opportunity to reduce your tax liability and how much ultimately you're going to end up paying.
Great, great to know. All right, so we covered everything. Fourth quarter. What's the last part about filing taxes?
Last step, there might be some other special situations. Probably most of them don't apply, but once you're all done with it, the software will go through kind of an error check, might ask you additional questions about retirement if you're eligible, and then walks you through the process of being able to review your return, do another kind of final check, and you can then transmit and e-file your return right from your computer. It'll give you a nice clean receipt. You can print it off your records or save a copy to your computer. And one other thing, so this whole pay-as-you-go system, when you have withholding or you make estimated payments, those are just estimates. It doesn't mean at the end of the day when you file your tax return, you're not going to owe tax. Your estimates might have been incorrect. It may mean that you overestimated and you're going to get a refund. Those can all be done, payments and refunds can be done electronically, direct deposit or direct debit right to your bank account.
Patrick, this has been so incredible. The detail and the steps and teaching us what we need to know. So the final word goes to you. If you want those listening, NIL athletes and others to remember one thing, what is it?
Don't view it as a distraction. It's necessary. It's kind of the start of something you'll be doing the rest of your life. When my daughters from graduated from college, I, being the CPA dad, always did their tax returns, and I turned over their usernames and passwords to them, and they have learned so much about retirement, about taxes, doing it on their own. They've always got CPA dad to come and ask questions, but again, they have learned so much from doing it themselves. And yeah, they probably don't look forward to it, but they know in January be looking in the mail, be watching for emails to get those forms, and they start the process. So don't be afraid of it. The IRS mostly is computerized, but they have people that can help. TurboTax has people that can help. It's just something we have to do. So good luck with it.
Thanks, Patrick. Well said. Thank you so much for sharing your expertise today. You've really given a roadmap to success. At Intuit for Education, our mission is to help you build financial confidence for life, not just for tax season. We're here to support you with free tools, guides, and resources as you navigate all that comes with managing your finances. So, for Patrick and on behalf of Intuit for Education, thanks for joining us today. We're so excited to be a part of your journey.